Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, December 3rd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So you have copper surging overnight, up about 1.75%. That's up about 10 cents on the overnight session and coming off of its best levels, while silver ETFs, they continue to explode. So silver reaching a contract high in the early hours of the overnight session, up at 59.65 and a half. And it reached its record high before experiencing a pullback as investors await some of the key U.S. economic data. Remember, we've been in this slump where we haven't had any data, and traders are really particularly interested in the job and industrial production figures to get a better understanding of the state of the economy. So the recent rise in silver prices have been particularly fueled by speculative investments anticipating supply shortages. Remember, last month, a record amount of silver flowed into London, which put pressure on other trading hubs. So additionally, inventories in the warehouses associated with the Shanghai Futures Exchange have dropped to the lowest level in almost a decade. So furthermore, silver-backed exchange-traded funds, ETFs, they added about 6.46 million troy ounces of silver holdings during the previous trading session here. This brings the net total purchases up to 121.3 million ounces, marking the third straight day of growth here and pushing those total holdings to the highest level since 2022. So you get back to the copper market. Copper rallied to a fresh record high in London after those requests to withdraw the metal from the London Metal Exchange warehouses surged by the most since 2013. This is led by spikes in orders for copper in Taiwan and South Korea. Really, it's the AI boom, it's the grid spending, it's the energy that's just, the demand is just unable to keep up with the supply here. Or sorry, the supply is unable to keep up with the demand is what I mean. So the gains in recent weeks have been fueled by speculation that there could be this looming shortage as traders are divert huge volumes of the metal to the US to front load any possible tariffs. That's why I've been saying that on the silver front, there's plenty of silver in the United States, but much of it, and the same with the copper, is not ready to leave the United States here to alleviate some of those squeezes that are taking place at certain trading hubs because of the possibility of the tariffs. So the supply issues have also dominated the copper market throughout the year, and it's really been decades. I've been trading copper with clients for years and years, and it seems like the same thing. You've got an earthquake, you've got a strike, you've got a mudslide, you've got some kind of mine that has some kind of event, and the supply just isn't there. And the problem is you've got a lot of legislation and things like that that make it difficult to alleviate some of these restrictions and get the supply brought back a lot faster. So it's just these bottlenecks after bottlenecks that tend to squeeze prices higher over time. It's only deflationary environments that really impact that copper market. So one thing traders will want to know is that China has been an economic slowdown at the moment here, and that's part of the reason why some of these markets, I believe, could be a bit higher than where they're at the moment. So we just want to keep an eye on the Chinese economy as well. Now, you had those unplanned mine disruptions in Indonesia and Chile, and that was what broke this market back to the upside. So Chinese smelters and the miners are locking in their supply talks for 2026, and they're proving difficult as miners are holding the upper hand on negotiations. So you've got China that wants to purchase. They're also in an economic downturn. You got the miners that are holding out and giving them some of those supplies, and you've got a bit of a squeeze going on in the overnight session. So looking at the broader markets, this is where we get into the equity markets, the currencies, things like that. The futures, they are edging higher here. We do have the ADP jobs data as the main calendar item today, and traders are weighing in those conflicting signals with the AI story. You've got Marvell Technology is bullish on the demand for its custom chips, while competition appears to be intensifying between OpenAI and rivals. I believe that the competition really broadens the rally out. You don't want to see, there was too many people sending me this flow chart of NVIDIA feeding everything. We want to see things like Google. We want to see other companies out there really feeling into the mix here and broadening out the strength of this entire market rally. So you look at the S&P 500 up about 0.2%, 68.51. You got the NASDAQ up about 0.1% at 25,633. The Russell just up about 0.3%. So that's been one of the stronger ones here, really looking for those interest rate cuts. And then you go to the CME Fed Watch tool. Well, traders now anticipate an 87% likelihood that the Fed will reduce rates by 25 basis points at the December meeting. We are in the external blackout period here until the day after the meeting. And then you go to looking at the FX markets. Well, you do have a big, strong inverse correlation between the dollar, strength, and Bitcoin. And what happened yesterday and today? Well, you got a 2-day breakdown in the dollar index here with the dollar down 0.3% at 98.94. So the euro currency and all the foreign currencies really getting a boost here overnight. Kind of a mixed picture on the level of strength with the British pound leading the charge. And then you go to the 10-year treasury yield sitting at about 4.07%. Coming off of those higher levels here. A lot of traders putting on some call spreads, looking at the upside of the 10-year note, which has recaptured the 113 handle. You look at the VIX futures sitting at 1794 for December here, so slightly positive, but well below that 20 level where markets start to get choppy. You look at the Bitcoin market, 93,370, tacking on about 2%. That's about a $2,000 move higher and a big jump lower after that higher low posted on the charts. So look at that on Bitcoin. You do have the low that it made. You've got the higher low. Now it's extending upwards. Now it looks like it might be able to recapture a neutral to bullish trend back to the upside here, and much of it is fueled by the weakness in the dollar index. Now you get to S&P, the gamma exposure. Well, we've got positive gamma here still indicating lower volatility when market makers, they delta hedge their positive gamma, so they got to sell underlying assets as they rise, and they've got to buy as they fall to remain neutral. So the counteractions in the market trend really lead to greater mean reversion, lower overall market volatility. Now you look at Europe and Asia. Well, those European stocks, they gained. They were led by retail and also basic resource sectors. Well, the MSCI Asia Pacific Index was little change. You go to the economy again, November ADP jobs data due out 7:15 Central Time. You're going to have the September imports at 7:30, September industrial production and capacity utilization at 8:15, and then November ISM services at 9 a.m. So we'll get some volatility here in these markets. We're going to get some repricing of those calculations of what they expect the Fed to do at that December meeting. And then finally, you look at some of the ETF flows here. Well, they sold some gold, they bought silver, they bought platinum. So we covered silver already, but gold relatively unchanged. They cut about 29,000 troy ounces. The year-to-date ETF holdings are sitting at about 17% this year, up to 97.7 million ounces. Remember, gold has advanced about 60% this year and tacked on about 0.6% here yesterday. So if you guys want to open up a futures trading account, great opportunity to do it. I believe if you get a nice flush out in the silver market, some of those key levels of support, that 57.50 down to 20 yesterday, we saw that as a level that hold. Below there, it's going to be 55 to 54.50, and then below there would be a big washout down to 50 to that 47 level. At that point, I anticipate widespread institutional buying, and then also you're going to see your central bank buying back on the gold market because gold prices should be weighted as well on that particular breakdown. So the gold silver ratio is sitting at about 72 to 1. It's one of the lowest levels we've seen it in quite a while here. It feels like I was a broken record at 86 to 1, and then I was just making people mad when we were up at 95, 98, 102 to 1 way back when. So if you guys got any questions, want to open up an account, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.